prompted the trim, Garrett? The numbers?
Yeah, thanks for having me. It's mainly expectations for lower valuation multiples across the auto manufacturer industry in this environment in which we're seeing increased odds of a recession. So it's just a lower target multiple. Our estimates for next year in 2024 actually didn't change at all.
So it wasn't about the quarterly delivery figures.
It wasn't. And if you look at, Tesla shipped about 255,000 vehicles. That was up 27% year over year. If you look at the rest of the industry, on average, automakers' sales declined by about 20% in the second quarter. So, Tesla continues to outperform. And we think with the company in the process of ramping up their new factories in Austin and Berlin, the second half of the year is going to be a lot stronger in terms of their production and sales. So we remain very positive on the stock.
Sure, although maybe there's a difference between sort of positive for the long run and generational buying opportunity, and maybe there's not. I mean, could you make a case that Tesla has now priced in much of the success it's going to have in the years to come already?
Yeah, we put this report out and we looked at the long-term earnings potential of the company. So Tesla earned a little less than $7 a share last year. They did $54 billion in revenue. We think by the end of this decade, their earnings could be north of $30 a share and revenue north of $300 billion. And so, we view this 35% drop in the stock price as really a generational type opportunity, similar to an Apple or an Amazon, say a decade ago, in terms of a company that's really disrupting their industry and is going to take a huge amount of market share over the next decade. And so, we view this as a really good entry point for the long term in the stock.
Garrett, it's Dom. It's trading at 55, 56 times next year's anticipated earnings. Even with the pullback, some would say that's still too much. How would you counter that argument?
Yeah, so we would say look at the where it's traded over the last 5 or 10 years on a forward PE basis, and the multiples are well north of 100 times, and so it's actually trading at the lowest multiple that it's been trading at in a long time right here.
But it's still, what did we say, 55 times forward earnings or what have you. How are you valuing Tesla, Garrett, and what does it have to do for the next couple of years to justify the current price?
Yeah, we think they just need to continue to execute. They have an impressive pipeline of future products with the Cybertruck and the Semi coming next year, followed by the Roadster. We know their long-term goal is to grow their annual volumes from 500,000 vehicles sold in 2020 to more than 20 million vehicles in the year 2030. And so that's the long-term growth opportunity. And while the stock is down 35% year to date, it's been the best performing auto manufacturer equity by a wide margin so far this year. And so we just think they need to continue to execute and innovate, and the share price will grow along with their earnings over the long term.